Looking for M's like I lost a friend. Jump out of my bed like where the bread. You go hold the egg. Wait to bring the check. When we talk, we collect the car. Keep us in your thoughts.
Stack collectors and stackerticians. That was Ooh La La by Run the Jewels, and I am happy to be back with you this week after I took last week off for Lunar New Year holiday, which was great. I spent time with my family. And a quick note to start the show, I have also decided to do this show for 3 weeks in a row and then take a 1 week break so that I can do this sustainably. So there will be a 3 week on, 1 week off rotation for the foreseeable future. This is Expat Stacker coming to you all the way from South Korea. Let's get you filled in with some of this past week's events in the 5th ever weekly Restack show. If you're a returning listener, then welcome back. And if this is your first time joining, welcome. Please like, share, and subscribe. In this show, I summarize and review the news of the past week in the following format. First, we do a quick 5-minute market recap of financial markets. Then we do 5 to 10 minutes of finance/bullion related news or news that could be related to what we do as stackers. After that, we move on to a few minutes of world news and current events, and then we finish off the show with stacking community news and notes to update you about what's going on in the stacking community. I can't cover all the news, but I try to get to as much as I can, and my only objective with this show is to help keep anyone who wants to listen as informed as possible. I try to be as objective as I can be, although nothing is ever 100% truly objective. I aim to give you the facts and information, and it's up to you to decide what you think about it and what you'll do with it. Please leave your thoughts, comments, criticisms, feedback, questions, and suggestions in the comments section. So without further ado, let's get into this past week's news. In the metals markets, gold closed the week at $1,783.85 an ounce. So we will have to continue to see whether or not this is the new territory for a while for gold, or whether it can reclaim the 1800 level. The yellow metal is now almost $200 an ounce cheaper than its 2021 high of $1,960. Silver remained relatively strong, finishing the week at $27.26 an ounce. Silver hit a new 2021 intra-week high of $30 an ounce 2 weeks ago, and it is staying around this territory for now. Platinum reached an intra-week 2021 high of $1,300 an ounce and finish off the week in strong fashion at $1,270. As noted in the 4th episode of the weekly Restack, when platinum has dipped in the recent past, the floors have been steadily rising, and if you look at the 3-month, 6-month, and 1-year charts, it has been gaining a lot of momentum, so we will see if it continues to do so. Copper this week reached $4, which is a 5-year high for the industrial metal. Oil finished this week at $58.80, up about $1 since last week, and looks to be picking up momentum. Bitcoin is at an all-time high level at around $55,700 currently and continues to rise. Ethereum is also in record high territory at $2,016 currently. While the Dow Jones and the Nasdaq finished off the week slightly higher, it was a slightly down week for Wall Street, with Dow, S&P 500, and Nasdaq all finishing the week slightly lower than they started the week, although the Dow and the Nasdaq gained a little bit on Friday. Asia Pacific markets were mixed this week, and the Kospi in South Korea, where I am, slightly gained this week at just over 0.5%, 0.68. European markets were mostly up this week, and the US dollar closed out this week down about 0.2% against a basket of other world currencies. Investors around the world are trying to decide where they stand on cryptocurrencies as they continue to skyrocket. While the discussion around silver may no longer be in the center of attention, demand continues to remain extremely high. Geopolitical friction, natural disasters, and the vaccine rollout to combat the global pandemic are all at the forefront of what many people around the world are focused on. Let's turn now to precious metals and financial related news. JP Morgan recently claimed that it added over 3,416 tons of silver to SLV between January 29th and February 2nd by tapping LBMA vaults in London. The very next day, on Wednesday, February 3rd, the iShares Silver Trust prospectus was changed and eventually added to the SEC's website within a week, with 3 new additional paragraphs. The additions to the prospectus state that demand may have temporarily exceeded supply, delivery may not be possible, and it gives warnings about price volatility. The paragraphs state, quote, "The demand for silver may temporarily exceed available supply that is acceptable for delivery to the trust, which may adversely affect an investment in the shares. It is possible that authorized participants may be unable to acquire sufficient silver that is acceptable for delivery to the trust for the issuance of new baskets due to a limited then available supply coupled with a surge in demand for the shares. In such circumstances, the trust may suspend or restrict the issuance of baskets. Such occurrences may lead to further volatility in share price and deviations, which may be significant in the market price of the shares relative to the NAV." End quote. Another paragraph related to the risks of shares states, quote, "A sudden increase in demand for shares that temporarily exceed supply may result in price volatility of the shares. A significant change in the sentiment of investors towards silver may occur. Investors may purchase shares to speculate on the price of silver or to hedge existing silver exposure. Speculation on the price of silver may involve long and short exposures. To the extent that the aggregate short exposure exceeds the number of shares available for purchase, investors with short exposure may have to pay a premium to repurchase shares for delivery to share lenders. In turn, those repurchasers may dramatically increase the price of the shares until additional shares are issued through the creation process. This could lead to volatile price movements in shares that are not directly correlated to the price of silver." End quote. And the third paragraph is related to price volatility, and it states, "The trading price of the shares has recently been and could potentially continue to be volatile. The trading price of the shares has been highly volatile and continue to be subject to wide fluctuations in response to various factors. The silver market in general has experienced extreme price and volume fluctuation that have often been unrelated or disproportionate to factors such as silver's uses in jewelry, technology and industrial applications, or cost and production levels in major silver producing countries such as China, Mexico, and Peru. In particular, supply chain disruptions resulting from the COVID-19 outbreak and investor speculation have significantly contributed to recent price and volume fluctuations." End quote. All right, moving on. The U.S. stock market's total value reached a valuation of 200% of U.S. GDP for the first time ever. This is a significant event, not only because it's the first time it has reached this high of a valuation, but because over the past century, whenever the U.S. stock market has quickly and strongly gained value relative to U.S. GDP, a correction has occurred and gold prices have sharply increased during the correction. Here's a few examples. In 1933, President Roosevelt devalued the dollar against gold to spur inflation and stimulate the economy. The gold price was increased from $20.67 an ounce to $35 per ounce, as is indicated by point number 1 in this chart. Internally, the U.S. abandoned the gold standard in 1933, but externally, the dollar remained convertible for gold at the Treasury against fixed parity. This changed in 1971 when President Nixon suspended convertibility, enabling the U.S. to print any amount of dollars it wanted. Soon after, double-digit consumer price inflation occurred, and the gold price skyrocketed from $41 an ounce in 1971 to $850 an ounce in 1980, up 2,000%, as you can see in point number 2 in this chart. To combat this inflation, the Federal Reserve increased its target interest rate to 19%. The Fed's policy worked, inflation declined, and the gold price crashed back down to roughly $300 an ounce. When the dot-com bubble in the late 1990s popped, the Federal Reserve lowered interest rates to 1%. Low interest rates boosted financial assets and caused inflation to trend upwards. The gold price began its march from $270 in 2000 to $1,900 in 2011. Up 640%, as you can see on point number 3 in the chart. Along the way, the gold price was supported by subprime mortgage crisis in 2008, which is point number 4 in this chart. And after 2008, the Federal Reserve unleashed unconventional monetary policy. The Fed lowered short-term interest rates to 0 and started printing unprecedented amounts of money to buy bonds and mortgage-backed securities to lower long-term interest rates. Ever looser money has fueled recent stock market gains to extraordinary highs. In most cases, the price per share exceeds the actual corporate earnings by a factor of approximately 4 to 1, as you can see on this chart. Regardless of whether or not individuals and institutions think gold is undervalued or overvalued right now, with the historical data just outlined, the US dollar and equity market certainly seem to be overvalued and are in a bubble. When it pops, a downward correction to the value of fiat and equities is likely to occur, which could lead to an increase in the spot price of gold. As you can see from this week's Commitment of Traders report, as has been the case for most of the past year, non-commercial and retail investors are net long on gold, while commercial traders remain net short on gold, and the same is true for silver. Addressing the Russian parliament following the inauguration of his recent election victory, Russian President Vladimir Putin said that, stating, quote, "total independence from the worldwide banking cartel and Rothschild global money providing organizations would be the, quote, biggest gift he could provide to future generations." Mr. Putin said his country is finally free from the, quote, icy grip of the Rothschilds banking cartel and the New World Order cabal. Putin went on to say, quote, "We used to behave naively, but now we see that the WTO rules are all too often broken. The restrictions are imposed for political reasons, which they call sanctions. Plus, more and more of them are imposed to secure its favorite competitive advantages," end quote, Putin said. Putin has vowed to continue, quote, unburdening Russia's economy from the dangerous monopoly of the US dollar in order to guarantee Russian sovereignty in an increasingly globalized world. According to the Russian leader, de-dollarization needs to be promoted on principle in order to protect the country's sovereignty. Russia holds far more gold in its reserves than it does US dollars. Bitcoin has been receiving a lot of attention from institutional investors, corporations, and even governments. Tesla founder Elon Musk recently purchased $1.5 billion worth of the cryptocurrency. This continues a trend of institutional investment into the cryptocurrency, with companies like MicroStrategy, NYSE, ticker MSTR, which has invested heavily in Bitcoin and is currently seeking a $900 million loan to acquire more, as well as private equity firms like Social Capital, which is heavily invested in Bitcoin. Apple has recently announced that they will accept Bitcoin as payment, as well as Tesla and a number of airlines, and as many online bullion dealers already do. Furthermore, in the U.S. city of Miami, city commissioners have voted to support the mayor's resolution to allow payments in Bitcoin for salaries, taxes, and fees. The city also supports efforts to make Bitcoin an acceptable currency for potentially investing in the state treasury. However, not all of the attention on Bitcoin has been positive. Janet Yellen has recently stressed importance of crypto regulation, apparently in an effort to ensure Bitcoin is not used in illicit transactions, and the SEC is cracking down on cryptocurrency exchanges it claims are not legal. Now let's move on to general news and current events. House Democrats have approved U.S. President Joe Biden's $1.9 billion stimulus package, which was approved by the Senate after Kamala Harris cast the tie-breaking vote. Provisions of the stimulus package include a 5-year phase-in of $15 minimum wage by 2025, $130 billion in aid to schools to assist reopening efforts, $160 billion for vaccine rollout, expanded COVID-19 testing, and other funding for the healthcare sector. Enhanced unemployment benefits extended through September 2021. An additional $1,400 in stimulus money to many American citizens. According to a Quinnipiac poll released on February 3rd, 68% of Americans surveyed said they support Biden's $1.9 trillion stimulus plan, while 24% of people polled say they oppose it. 78% of Democrats are in favor of the plan, and even a majority of Republicans favor the plan, with 53% in support of it. As I recently reported on my YouTube channel, on February 1st, a military coup occurred in the Southeast Asian nation of Myanmar, also known as Burma. Since then, civil unrest and protests have gained momentum as citizens in Myanmar are engaging in various types of protests and resistance against the new military junta, while the military has heavily cracked down on the protests. The military government also released thousands of prisoners into the streets, repeating what it had done in the past, and has restricted internet access. Intergovernmental organizations are now attempting to remove their workers from their posts in Myanmar, and several nations are threatening to heavily sanction the country if order is not restored and the democratically elected leader, Aung San Suu Kyi, is not reinstated. As reported in a previous episode on this show, China has passed a controversial law giving its Coast Guard the ability to use any force necessary in Chinese waters. This has already led to numerous skirmishes with the Japanese Navy and Coast Guard over the disputed island territory known as Sengaku in Japan and Diaoyu in Chinese. The uninhabited islands are claimed as sovereign territory by Japan, China, and Taiwan. However, Japan has effective control over this territory, with its Navy and Coast Guard regularly on patrol around the islands. China has also had numerous skirmishes recently with naval vessels from other Southeast Asian neighboring countries as a result of the new policy from Beijing. A 7.3 magnitude earthquake which hit Japan has reportedly caused reactor fluid at the Fukushima nuclear site to again start leaking into the ocean. On Friday, February 20th, U.S. President Joe Biden made a digital address at the Munich Security Conference. In the address, Biden reaffirmed the U.S.'s commitment to its European allies. On Iran, Biden said that quote, Washington is prepared to re-engage in negotiations with the P5+1 on Iran's nuclear program, end quote. And that, quote, we must also address Iran's destabilizing activities across the Middle East, and we're going to work in close cooperation with our European and other partners as we proceed, he added. Biden also highlighted the rising tide of autocracy in the world by focusing on China and Russia. Biden even referred to Russia as a, quote, bully, and stated that, quote, we are in the midst of a fundamental debate about the future direction of our world between those who argue that, given all of the challenges we face from the fourth industrial revolution to a global pandemic, autocracy is the best way forward, and those who understand that democracy is essential to meeting those challenges, end quote. Blizzards have slammed many places throughout the world, including Israel and the southern and eastern United States. Power outages in Texas as a result of the sudden cold snap have led to deaths of several citizens. Now let's move on to community news and notes. As mentioned before on this channel, Juice Stacker, Silver Husky, and DOA have teamed up for a joint venture that they call the Metal Merchant, in which you can buy, sell, and potentially even trade precious metals. These are long-time trusted members of our community. They have already served the community well by offering silver and gold for smaller premiums than all of the large retailers, when the larger retailers raise premiums exponentially. One benefit of doing business with them is that you can reach out and deal directly with them, which you can't do with the larger online bullion dealers who are still charging extremely high premiums. Furthermore, all of the online bullion dealers have delays with their shipping, while existing customers of the Metal Merchant have received their bullion in just a few days after purchase. The Metal Merchant is also offering extremely competitive pricing. Their website will be operational in approximately 1 week, and you can currently do business with them by reaching out to them on Instagram at Metal Merchant Official or at Juice the Stacker. I have no financial affiliation with the Metal Merchant, and this is not a paid promotion. I just believe in free market competition and supporting fellow stackers who are trying to serve the community. Juice Stacker, Aloha Stacker, and Pirate Stacker all recently surpassed 1,000 subscribers, so congratulations to all of them for that achievement. If you are not subscribed to those channels, you should definitely go over and check them out, and if you like their content, definitely subscribe. Silver Britches has appeared on the Silvercast with Silver Conundrum and myself, and we will have the next and final part of that episode released on Silver Conundrum's channel next week. Lucy Stacks has a video out that has information at the end of it for anyone who needs information for themselves or anyone they know who is suffering from addiction. Lucy Stacks would also like to give a PSA to let everyone know that they should sleep, and don't forget to wash your backside, although those were not the words that she used. Check the link in the description for my SoundCloud page where you can listen to this episode as well as a backlog of episodes on the go, and hopefully I'll soon be approved for iTunes. This episode was brought to you by Inefficient Stacker's Canned Tuna, which is made from 80% dolphin, negative 10% tuna, and 57% white cheddar powder, and 17% other. Inefficient Stacker's Canned Tuna, it tastes like dolphin tears. Let's all continue watching gold, silver, platinum, copper, and cryptos this next week. I hope you all have a wonderful weekend. Leave your thoughts in the comment section.
Look alive, looking like I live life on a crooked line. Doing fine. You want maximum stupid, I am the guy.
Stay tall, oysters on the half shell, sushi ball. I'm a dog, I'm a dirty dog. Ha 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 ha. Oh, dirty bastard, go in your jaw. Shimmy, shimmy, y'all. Got the simmy in the hemi, go and gimme, y'all. Pugilistic, my linguistics, RJ Ruder damage, y'all.